Hey guys, yeah, we're turning this channel into a trading channel. Today we're gonna be explaining how to determine the daily bias and to understand the daily bias top-down analysis in general. I'm gonna make it as fast as possible, so rewind the video if you don't understand something or wanna check back. Okay. Okay, now so we're gonna start with seeing the overall trend. As you can see, we're just gonna focus on the last 3 months. On the daily time frame, we need to focus more on the highs and lows and institutional levels, which are the 0, 0, 20, 50, and 80. I'm gonna be showing that later on in this video. We're gonna also focus on daily break-off structures and daily imbalances. And we're gonna try to determine if the high or low is protected or not, which is valid. I'm just showing you like all what you need to see, which is like 3 months. I'm using the replay tool to show you the August 25th example of a reversal, what you can call a day reversal, a week reversal. We're just continuing the trend on the daily, which is bearish, which is a hard example. I'm gonna be making more videos on like an easier day. I'm just now using a harder day, as you can see. Okay, now we can see the swing highs. Swing highs should, or lows, to see if it's valid, it should create imbalances, which is like momentum. As you can see on the push, we have momentum over there, and it has to retrace to the 50% EQ after breaking a structure. Now we see this one is protected. Since we don't need to see before 3 months, we can determine this one is protected since it retraced to the 50% and it created momentum. I put it out the 4H order block, 4 hours order block. I'm gonna get into it later, but it's a 4H order block. You can see the high, which we need to determine if it's valid or not, protected. It fitted the 4H order block perfectly, like to the pip, and it touched the daily imbalances, which you see between two lines, which is the fair value gap, as you may call it. It's the daily fair value gap. Now we're focusing about 1 month before, which we're determining, and now we're gonna see if this swing, we're trying to determine if the 4H order block swing is valid. We can see it touched the EQ already. EQ is the 50% level of the retracement of the Fibonacci. You can use the Fibonacci or any tool you want. It's the 50% PD array stated by the ICT. Credits goes to him. Okay, now I'm just showing you the 1H, the daily fair value gap imbalance. Sorry, this video pre-recorded, so it's a voiceover. Okay, now we're gonna get into the important stuff, which is like 3 weeks before, all we need to do in the daily. Don't spend more than 5 minutes on the daily. 1H and 4H is the most important when determining bias. Now this one is a break-off structure. Since you see it already retraced to the 50% of the bullish retracement, after a break-off structure on the daily, you can see there's always a retracement. Same thing with the 1H, 1 minute, and overall. Like it's a concept rule of the algorithm. So when this is a break-off structure and we determine that the high is valid since it touched the daily and it created an imbalance and it retraced to the 50, and it touched the imbalance as I said before. We're using the range after it broke the structure to see if it will touch the 50%, which is dotted at the middle dotted line, which is red. Maybe it's not clear, but I'm gonna point it out later. I'm now drawing the daily fair value gaps, which are made on the previous week, a few days ago, or the entry. I'm gonna show the entry later, which I put the fair value gaps between two lines. If you don't know what's fair value gaps, I'm going to be explaining them in other video and order blocks, the basic stuff. Now we're tracing after the break-off structure on the daily. Now I dropped down to the 4H. After retracement, now we're still considered bullish, since we still didn't touch the EQ, which is the equilibrium 50%. So we're still considered bullish. So if you want to enter in these days, you're going to aim for the bullish EQ range line. But now I'm gonna be explaining the entry for the reversal, which is like a tough day. 70% of the reversals and the high of the week or low of the week is set on Tuesdays, so keep that in mind. Now you're gonna see the entry is gonna be on Tuesday. I already saw the video before. I'm gonna be making more examples and putting live trades in the future. Okay, so right now we're still bullish. I'm gonna forward few hours so we get into the EQ range. We should stay bullish right now. You can see the structure now on the 1H. It's more detailed. We can see more information. We need to spend the most time on the 1H when we determine buys. It's the most important. Like some people doesn't even need to open the daily. You can just zoom out on the 1H and it will be enough. But always spend a few minutes on the daily, maybe 2 or 3 minutes. Okay, we still didn't touch the EQ even though we came close to it. We still didn't touch it. I put it on the red line, EQ range daily it's called, as you can see. Okay, right now we're still bullish. If you want to take a bullish trade, you can do so right now. I recommend New York session for such trades. Now I'm plotting out the break of structure on the 1H. I'm gonna be explaining why is this a break of structure. It's called a mini break of structure, so it's not really valid for swing trades, only for scalping, because we still don't have the real break of structure. Because you see, after we broke structure, I mean the low, you can see I clicked misclick. That kind of spoiled it. Wait, let me get back to it. One sec. Okay, continuing. Okay, now we touched the EQ daily range, and you see what happened, a momentum. That momentum push is clearly indicating the bearishness in the market and how the market makers are getting into the market. Now down here, you can see it's a break of structure, but it's not yet a valid break of structure, even though I'm gonna write one. It's valid for scalps. So you can over here enter for scalps reversals, but I don't recommend them yet, because since it's not really a break of structure, since this low that I'm plotting it on, even though it created momentum, it didn't retrace to the 50% level. So we have no indication if it's valid or if it's an inducement. I'm gonna get more information in other videos. If you don't understand some terms, comment in the section if you need any help or any questions. You can see why in the EQ range it reacted at that level. There's an order block on the left. I didn't write it down, but it's really clear on the 1H, or you can see it on the 2H, 4H. You can see liquidity even down there. Okay, see now I'm putting the Fibonacci to see if the low, which I wrote the 1H BOS valid, did actually reach the EQ level, which it didn't. We're now using the bullish mini trend from the daily after the break of structure as our range to determine if it broke structure or not. Now the market kept falling down. There's really nothing you can enter with it if you missed out already. This is like its own market maker. Like either you catch the top or you don't. You don't want to enter down here, since we don't know when it's gonna reverse and give us our supposed entry. Now this is a valid break of structure. Notice how it fits the imbalance on the 1H perfectly. This you can call a king low, maybe. That's what they call it. Now after this, we can wait for the retracement. Now we conclude that this high is protected because it broke structure, it created momentum, but we still don't have the 50% entry for our entry. We still don't have the 50% retracement. Now it kept falling down. It also broke the main swing low, which we can see at the daily also, which is even more valid break of structure. Still, there is no entry to be taken. Now after the retracement, there is always, after the break of structure, there is always a retracement, as I said. Over here, you can even catch the retracement from the weakening of the market from down there, but it's too risky. There's an entry right now. It's still, oh, right now it actually touched the EQ as you can see the dotted line. Now here, we're gonna start looking for an entry. So I'm doing the voiceover. Okay, now I skipped few minutes after that, like a day. Okay, as you can see, how can we determine that the low, this is not a break structure, even though it touched the EQ, we still don't have a break of structure, even though we have a swing low, but this swing low did not touch the 50% retracement of the bullish range. As we can see, we don't have a rally base rally. Maybe we do on the 1H, but even though we still don't have a valid one, which we can see on the 15 minutes time frame, which makes it not valid. So this low set is not considered a break of structure, so you cannot enter on the retracement again and target the 1.5 extension, which I normally do. So we still considered bullish since we do not have a break of structure. So this is all the market trying to trick people in smart money concepts into taking shorts here, faking a reversal. You can see it retraced back to the 15 minutes order block and then it spiked back up again. This line I'm showing here is not a break of structure. It's not considered a break of structure since this low did not set any new highs, did not push momentum, did not do anything. So right now we're still bullish, even though this is a perfect example of when you can know when to go bullish. Like, even though it's trying to trick you, when you see these examples, like when it's not setting a high, that means it's ready for a big push, like a big fake. You can enter with the fake right here. You can see it retrace with the 50%, and you know it's not real retracement, and it's not giving a real entry for a bearish trade, so you can go bullish right here. You can plot the 15 minutes order block you see, and after it breaks the line, it performs an ICT structure right here, if you know the ICT model. Or you can drop down to the 1H and find a 1 minute break of structure and then enter at the retracement, the basics. Yeah, this is all not valid reversal. I'm talking about the high time frame reversal for the 1H and 15 minutes. I'm now explaining for the swing traders how to enter. You can see the second low, it's actually hit the EQ perfectly right here. But did it set new highs? No, it didn't. So it's not a valid break of structure. Sorry, I'm trying to get the bullish trade to show you an example of what you can target right here. A scalp maybe. Do not go over, like don't go win to lose ratio on when trading reverses such as this. We're basically now trading a retracement if you want to go bullish. Now we're gonna focus on the long time trade, the swing trade, or you can make it a scalp, 2RR to 10RR maybe. I don't do these 20RR. I think they're all of them are like bullshit. Although I once did 20RR, maybe 19. That's my highest, but it was luck. I was a beginner back then. Okay, another mistake. I'm skipping few minutes to wait for the market weakening. Okay, now we're into the range. We took the high, which was used to fake, which is called like an inducement high, or you can call it an inducement order block. Now we know the market is ready to reverse. Now you can see the institutional level, which I mentioned earlier, the 500 level, the 0, 0, 200, 500, 800 levels. This is used mostly on the daily to set out like where reverses, and you can see if it's valid institutional level to see if it has action done on it before, like it showed resistance on that level, since the markets likes to push money on certain levels, like not odd numbers like 2, 3, 4, 5, on like 500, 800. This is all taken from the Inner Circle trader. I learned that from him. Credits goes to him. Okay, you can see now how it starts to retrace on the 500 level, which is a major institutional level. So we are pretty confident that this high is going to be protected, but we still don't have any proof or any break of structure to show us that this high is gonna be protected. I'm sorry if it's kind of unclear. Ask me any questions in the comments. I'll be happy to answer. Now we plot out the break-off structure. Even though it's far, it's the only one that we can validate. It's the closest one we see. Now, after we broke this law, this is our final break-off structure. So our entry is confirmed. Now we're gonna look for entry on the retracement to the 50 EQ. We can enter blindly on the 50 EQ, just enter when it is the EQ. You can see it keeps doing more lows before it retraces. Anyways, when it traces, you can enter any entry on the 50%, just enter and set the high above on the line, above the high, and target the negative 1.5 extension. That's how I usually do it, which will usually set on an institutional level, like all kind of targeting methods you have. I'll be doing a video on various ones I know, which I used to do. Right now I only do the 1.5, I only target 2 RR stable, all my trades. Now it touched the EQ of the inner EQ range. I know it's getting kind of complicated, but when you get used to it, you can do this fast without even drawing on charts. It's really easy, don't complicate it too much. Now we're gonna look for a mini break-off structure to confirm entry, or you can just enter like this as I showed you. When dealing with such time frames, I like to go down to the 1 minute and look for entry. Right now I'm showing you the 5 minutes, and yeah, that's it. The market falls. It gave us actually another opportunity to enter down there, and that's easy to RR. It even keeps dropping, as you know, since this is taken from a replay tool. I'm gonna be showing more live trades, explaining more. I'm gonna be clearing out any terms you don't know. Drop them down in the comments, ask me questions, I'm happy to answer. I'm gonna be also doing more easier days on reading bias, since this one is considered hard, like it doesn't come every day. But these concepts that I'm showing here can be used on many other trades, many other time frames. It's overall like what you should use, not on a certain time frame, like overall in general. The concepts and the retracement to the EQ and the PD arrays and everything, how to determine swing highs and lows, can be used on the 1 minute up to the weekly if you wish to trade. So thank you for watching. Drop a like if you like the video. Yeah, that's it.